The U.S. added 303,000 jobs, which exceeded the 214,000 jobs expected by Wall Street. This should be good news, except it isn't, not even by a mile, because literally all of the 303,000 jobs were either part-time or went to non-US born workers, mostly illegals. On the screen, you will see the numbers of part-time jobs soared by 691,000 to 28.6 million, up from 27.9 million, while full-time jobs dropped by 6,000 to 132.9 million. The figures become even more startling when we stretch the timeline to encompass the past year. As illustrated in the following chart, from March 2023 onward, there's been a dramatic shift in the workforce. The number of full-time workers plummeted by 1.3 million, whereas the number of part-time workers surged by a staggering 1.9 million. Since 2018, a significant portion of employment growth has been attributed to immigrants, many of whom are undocumented. However, following a sharp decrease in the number of jobs held by native-born workers over the past 3 months, with nearly 2.5 million losing their positions, there was a positive turnaround in March. A substantial increase saw 929,000 jobs being filled by native-born individuals. Concurrently, after witnessing a historic rise in unemployment among foreign-born workers last month, March continued the trend, with undocumented immigrants securing an additional 112,000 jobs. This surge has propelled the total employment of foreign-born workers to an unprecedented peak of 31.1 million. Fed Chair Jerome Powell said in his 60 Minutes interview that immigrants work harder and help keep workforce costs down. Further, CBO Director Phil Swagel said that as a result of those changes in the labor force, we estimate that from 2023 to 2034, GDP will be greater by about $7 trillion and revenue will be greater by about $1 trillion than they would have been otherwise. Neither of them commented on the trillions it will require to finance the illegal immigrants and $20 trillion in debt the U.S. will have to soak up in exchange for the $7 trillion GDP. While immigrants are not damaging the economy by working, the influx of new foreign-born workers has masked the employment challenges faced by native-born citizens. Additionally, nearly a quarter of the new jobs added were in the government sector, significantly higher than the usual 10 to 12%. Similar to the relationship between government spending and economic growth, government hiring inflates the official job numbers by detracting from the economy that produces real value. Economists like Daniel Lacalle believe that the U.S. is already in a private sector recession, but government spending and hiring are propping up the official figures enough to conceal this fact. A recession seems unavoidable, largely due to a decade of interest rate manipulation by the Federal Reserve, especially during the pandemic. The downturn in full-time employment further supports Lacalle's perspective. However, jobs numbers are just one aspect of the broader picture. The stock market has been highly volatile, not because of shifts in consumer needs or new technologies, but due to statements from Federal Reserve officials about future actions. Meanwhile, prices remain high and continue to rise, much to the dismay of even some of President Joe Biden's strongest economic supporters. Our money is now worth about 20% less than it was 4 years ago, with no signs of this trend reversing. This is causing significant pain. The scene is set for your future. This is where the future is headed. We can only hope for things to change, but at this stage, our future is completely up to us. We need to make sure that whatever we have, right, the money we worked so hard for all our lives, the money that should take care of us for the rest of our lives, will keep its value. Do not allow anything or anyone to make what we worked so hard for irrelevant. The only way that you can do it is by freezing the value of your money, by investing it in an asset whose value doesn't go down during economic turmoil and is steady the rest of the time. That asset is gold. That is why it is the asset that even central banks and billionaires invest in. You should too.